OpenAI just announced a massive deal with AMD that could be upwards of $60 billion. Of course, that comes roughly a couple of weeks after OpenAI signed a deal with Nvidia that could be worth upwards of $100 billion. So these big deals with two rivals have investors asking which one is the better stock to buy, Nvidia or AMD. I'll answer that question in this video, comparing the two companies on critically important metrics and sharing with you my valuation calculation for each of these two companies. So let's jump right into it.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the first metric I wanted to compare these two on is revenue growth, and you can see Nvidia separating itself from AMD in 2022 when its revenue soared from 27 billion all the way up to 165 billion. AMD's revenue has been growing nicely also, but compared to Nvidia, it looks like small fries. AMD's revenue has increased from 5 billion to 29.6 billion. That's good for a compounded annual rate of 23.5% over the previous decade. Nvidia has nearly doubled that with a compounded annual growth rate of 44.5%. Now, these new deals announced with OpenAI will help both AMD and Nvidia. OpenAI is a customer of both. OpenAI actually purchases and utilizes more of NVIDIA's products than it does AMD's, and it's hoping to reduce its reliance on NVIDIA chips by making this deal with AMD. So this deal wasn't a matter of, in my opinion, AMD's chips being better than NVIDIA's chips. It's a matter of OpenAI reducing its reliance on NVIDIA. It's become a huge risk for OpenAI with such a dependence on NVIDIA's technology, so it wanted to reduce that risk by making a deal with AMD. All of these large hyperscalers want a strong second place option so that NVIDIA cannot command such strong pricing power, such strong negotiating power. Of course, NVIDIA is flexing its power. Its gross profit margins are approaching 75%, which is unheard of for a company that sells mostly hardware. So that's why these companies, I see them going towards AMD a little more over the next few years to reduce their reliance on NVIDIA. And that can be great news for AMD. The next thing I wanted to compare these two on is the return on invested capital. And again, NVIDIA separated itself from AMD, soaring its ROIC from 24.8% all the way up to 142%, which is the best ROIC I can think of off the top of my head of any company that I'm following. Returns on invested capital of this magnitude are not very sustainable. Competition usually comes in when they see you're generating this kind of return on invested capital. The buyers of your product usually integrate into the products you're selling to alleviate your advantage, as you're seeing with Microsoft, Amazon, Alphabet, all making and creating their own chips to reduce their reliance on NVIDIA. And as you saw the deal with OpenAI and AMD, again, it's geared towards reducing NVIDIA's power in this industry, where it estimates a 90%, it's estimated to have a 90% market share of these data centers optimized for AI, the accelerated computing units, the GPUs. AMD, meanwhile, its ROIC is still very low at 4.8%. It's collapsed since the days of the pandemic when sales of electronics were booming. Remember, AMD, its business is more heavily weighted in other categories like gaming consoles, personal computers, and laptops compared to NVIDIA, which generates a larger percentage of its revenue from the data centers optimized for AI. AMD, that segment of its business is growing much faster than the rest of its business, and it's accumulating and it's generating more revenue from that business, but it still is exposed to those other industries which are not growing anywhere near as quickly. By the way, these charts I'm getting from fiscal.ai, which is my preferred data provider. There's a link in the description if you're interested in their services. So looking at valuation now, on a forward price to earnings basis, NVIDIA and AMD, they were trading at similar valuations until this deal with OpenAI created that increase in AMD share price, right? On Monday, you saw AMD stock price jump by almost 30%, and that's before its earnings increased. And so you saw the forward price to earnings ratio jump because the price increased, which is the numerator. The denominator is the expected earnings per share in the 1 year ahead, which is not increasing because AMD will not be selling its chips to OpenAI until the end of 2026, and it probably won't ramp up until mid or late 2027. So its earnings per share expectations for 2026 are not likely to increase by all that much, but the market price is increasing. But its earnings per share expectations for 2027 have increased. So if you look at the price to earnings ratio with the earnings per share expected in 2027, AMD's valuation would look a lot more attractive than it looks right now. Meanwhile, Nvidia is trading at a forward PE of 33, which I have noted several times is an undervalued opportunity for long-term investors. I also calculated a fair value for these two businesses using my proprietary discounted cash flow valuation model, and I updated my AMD discounted cash flow valuation based on the details of the deal that I saw with OpenAI. Now, the details were not very specific, but using the data that they did provide in the press release, I updated my discounted cash flow valuation by increasing the expected free cash flow for AMD starting in 2027. I increased their free cash flow by $3 billion each year from 2027 onward. So my 2027 expected free cash flow increased from 9.36 billion up to 12.36 billion, and similar for 2028 and 2029 and on and on. So I gave them a $3 billion per year increase because the arrangement of the deal seems like they're going to generate roughly $10 billion in revenue annually from OpenAI by selling their GPUs, and I'm estimating a 30% free cash flow to revenue conversion for AMD, and I'm forecasting that onward. Now, I will narrow down that forecast going forward as more details emerge, but based on the details that were provided, that's how I updated my discounted cash flow valuation model. And of course, that created an increase in the intrinsic value per share because I increased the expected free cash flow. So the intrinsic value per share came to $189. It's still below the market price of 211, but if I apply a margin of safety, which I always do, I'll say that AMD stock looks fairly valued based on the current market price. Now, Nvidia, I calculated a similar discounted cash flow valuation, and the intrinsic value per share I calculated for Nvidia is $183. The current market price is $185. Again, applying a margin of safety here, I can say Nvidia stock looks fairly valued based on my discounted cash flow valuation model, but I can also say that Nvidia stock looks undervalued based on the forward PE multiple. So if I had to pick between these two excellent companies, I would pick Nvidia. And in fact, I have picked Nvidia. I own Nvidia stock in my own portfolio. I bought Nvidia stock a few months ago at around $93, $94 per share. So I'm happy the stock price has almost doubled since I purchased. And if I had to purchase again today and I had to pick between the two, I would pick Nvidia again. I like Nvidia's prospects much more than I like AMD's prospects, but I think AMD also has good prospects, and I have AMD stock rated as a buy as well. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.